and welcome to today's market update session. So we're going to start first with the usual, talking about the latest market movers and what caused the recent moves that we're witnessing in the market, especially today's move. They are significant. And then we're going to cover this week's top economic events and releases. And after that, we're going to go to the MetaTrader 4 platform also to discuss the latest price action. So starting with the latest movers or the key movers in the market, we first still COVID-19 implications. They're still affecting the economic recovery, and especially this week we've seen cases surging again in the Euro region and also in the United Kingdom, and a little bit in the United States. Numbers were higher than the prior weeks, so this is causing some stress to the markets, and there are some expectations that maybe officials or governments could be forced for another to take strict measures again. So this could be weighing on the markets again. We've seen today at the open, European stocks were under pressure, and then this also moved with US stock index futures also. So we're seeing a rally towards dollar safety in the market, and this is caused definitely by investors' woes, or the woes that the current resurgence in COVID-19 cases could impact the recovery again, and maybe if things exceeded the norm, maybe we could be seeing some other lockdowns. So today in the headline we heard about some possible lockdowns. That's why the markets were under pressure during the day. So this is all about COVID-19, which will remain a key mover until we find a proper vaccine that could put an end to this pandemic. As Jerome Powell said, the Fed's chairman, there is no guidance on how this virus will affect the economy in the future unless we put an end to this virus, and then we can expect a recovery towards normal levels or pre-pandemic levels. Moving to also, we had the second mover, we had some encouraging Chinese data at the beginning of last week showing that the Chinese economy was able to recover on a faster pace than other economies around the world. Definitely since we knew that China dealt with the virus ahead of other countries. Also, we had the Federal Reserve Monetary Policy meeting, or the Fed's decision, where everyone was awaiting how the Fed will announce or will discuss the latest policy changes. Among the key things that we noticed in the meeting was the dot plot. The dot plot release showed that two members are expecting. Now, only one member currently is expecting interest rates to rise above zero in 2022 versus two members back in June. So this is also weighing a little bit on the path and adding to the chances of interest rates remaining near their 0% level or near the lowest level in order to sustain or reach a healthy and rapid economic recovery. So the Fed and Jackson Hole Powell announced that they'll be more flexible with inflation running above average. So they're putting employment ahead of inflation, and this will affect the guidance of Federal Reserve on the future. This week we are waiting some more information from Fed's Powell and some testimonies. We're going to be talking about this in the next part. Also, we have the Bank of Japan Monetary Policy meeting. Nothing changed from Bank of Japan. Policy settings will remain on hold. However, there are some questions about what's happening in Japan, especially after Abe is going down, and Suga is expected to replace Abe. So there are some questions whether the Abenomics will continue, or the new prime minister will have his own plan. So this is weighing on hopes of more expansionary phase in Japan, and we're seeing the Japanese yen strengthening against the US dollar. Bank of England monetary policy meeting. Also, the bank kept policy settings unchanged. Interest rates remained at 0.1%, and asset purchases at £745 billion. However, there were some discussions about negative interest rates. We know that the current Brexit, the Brexit standoff is a bit high, and this forced a sell-off in the British pound during the past couple 2 weeks. So the past week. So definitely there are some downside risks to the economic recovery in the United Kingdom. The COVID-19 resurgence also in the United Kingdom is weighing on the economic outlook. So this could trigger some further moves by the Bank of England. So just talking about negative interest rates added pressure on the British pound and raised the chances of adoption of negative interest rates faster than expected before. Soft US data, we've seen also disappointing retail sales figures, also disappointing housing market figures. These also added to investors' woes over the economic recovery in the United States. Also, we had weak Eurozone inflation figures. The final reading of the consumer price index for August also came negative, confirming the preliminary reading that was released 2 weeks ago. So this also could add the pressure on the European Central Bank in the future in order to act further to have a proper recovery, else we could be witnessing some tough times in the Euro region. So they have negative inflation, and currently COVID-19 cases are back on the rise. So this is also threatening the economic activity. So how the European Central Bank will deal with this, we will definitely have to monitor some economic data before any move from the European Central Bank. The Brexit standoff still, the retaliation that occurred 2 weeks ago is still weighing on the prospects of the market. So there are prospects of higher prospects for the United Kingdom leaving the European Union without a trade deal, and this will definitely weigh on the economic outlook of the United Kingdom. So these are the key movers, or these were the key movers past week. Moving to and definitely one of the movers will be in the future the US presidential elections, but currently it isn't mature yet, so we aren't witnessing much of a move. Just a little bit of impact was on the equity markets following the announcement of probability for or the plan of Joe Biden of having tax on corporates raised to 28% from the current 21% level. So these are the key movers. Moving to the economic calendar ahead. So on Tuesday we have Bank of England Bailey will be speaking. He will be participating in a webinar with the Chamber of Commerce. So any highlights or any talks about negative interest rates could impact the market. Moving to the United States, you have the existing home sales for August, expectations of a rise to 6 million from 5.86, and then we have Powell's testimony before the House of Representatives Financial Services Committee. So he would be commenting on the CARES Act, on how the money was spent, and definitely he got some questions on how the Federal Reserve see the future outlook for the US economy, and whether they still have tools in the arsenal in order to support the economy, or at least restore economic activity to good levels. Also, we have on the day the American Petroleum Institute weekly crude oil stock. Moving to Wednesday, we start early with the Reserve Bank of New Zealand interest rate decision. There are no expectations for any change in the monetary policy, so QE will remain on hold, and also interest rates to remain at 0.25%. Then we move to preliminary reading of the services PMI, manufacturing PMI from the Eurozone, United Kingdom, and the United States. So mainly from the services PMI from the Eurozone, expectations of numbers to remain at 50.5, slightly above the midline, the 50 line. Manufacturing to tick slightly higher towards 51.9 from 51.7. Manufacturing PMI in the United Kingdom to drop slightly to 54.3 from 55.2, and services PMI also to ease to 54.5 from 55. Moving to the United States, the manufacturing PMI, the market sentiment, or the market reading for the manufacturing PMI, expectations to remain on hold at 53.1, and the services PMI to ease to 54.7 from 55. And after that, we have the Fed's, the Powell's testimony before also the House of Representatives select committee that is related to the coronavirus. So he'll be testifying about the impact of COVID-19 on the US economy. So this definitely would also have some impact on the market. And after that, we have the weekly crude oil inventories by US Energy Information Administration. On Thursday, we start with the Swiss National Bank. There are no expectations of any change in policy settings. However, the bank will definitely reiterate that the Swiss franc remains highly overvalued, and especially if the euro will have to go back down again, this will add some pressure on the Swiss National Bank to move in order to have a proper Euro CHF level. Also from the Eurozone, we have the German IFO Business Climate Index, expectation of rise towards 93.8 from 92.6 in September. And the US initial jobless claims are expected to rise by only 843,000 versus 860. And also the Fed's Powell is again testifying, but this time before the Senate Banking Committee, along with the Treasury Secretary Stephen Mnuchin. they will be testifying about the CARES Act or the support bill that was approved back in March. And then we have the US new home sales for August, expectations of 890,000 reading versus 901,000 for Friday. It's a bit shy on the calendar. We only have the durable goods orders from the United States, expectations of a shy rise by 1.5% versus 11.4 in July, and the US Baker Hughes rig count, which dropped to 179 in last week's reading. So this is all for the economic calendar for the coming week. These are the top events, and especially all events that could be related to the Brexit negotiations could have some impact on the market. So now we're going to move to the MetaTrader 4 platform. So we're going to start with the euro dollar. So it's very clear that we've been trading in a sideways pattern here. We had a little bit of a higher highs, and now we're marking lower highs with lower lows. So you can see the market here. So if you can see here the pattern, how it was before, so the market was going for a high, higher high, higher low, higher high, higher low, higher high, and then we have a lower low, lower high, almost same low, and then a little bit of a rebound, and then we're moving here. So we have a sideways move, but earlier we had the sideways move with higher highs and higher lows, and currently we have a sideways move with the lower highs and almost equal lows to lower lows. So this is what you have to take attention to pay attention for. If you just have to mark the key levels or the key area that could find some support, definitely we're going to go for 117 level. You can also draw a trend line here combining these lows, which is almost violated here somewhere. So this area here should provide some support. The area between this low and the previous low. So this area here could be a support area and should be monitored closely by traders. So this is on the downside for the euro dollar, and definitely we have another key level, which is the previous stop that was posted in almost June, was around 1420. So this is a key level. So we have almost 117. We are talking about key levels, big levels, rounded numbers. We're talking about 117 and near almost 114, which a little bit also could be moved higher towards 115 levels. So these are the key levels for the euro dollar. Also, if we just have a bigger look at the daily chart, we can, ahead of this level that was retested twice here and acted as resistance, we can also go for a higher level, which is almost around 115. So these are the key levels on the downside for the euro dollar. However, on the upside, at first you have to monitor the downtrend line that is being formed by combining these recent tops, so how the price will react with any reversal towards the trend line. And after that, we have an interim resistance near almost 1920. I'm going to highlight it here, which was the high reached following the ECB decision 2 weeks ago, and the 120 level. So these are the key levels for the euro dollar if you're trading the euro dollar. I'm going to add some of the technical indicators and then explain. You can see also here how the bands, the Bollinger Band, we're using a period 20. So you can see how the bands are closer to each other, waiting a little bit of a breakout out of this range that we've been trading for the past two months almost. So this is for the euro dollar. We had this channel that was clear for many traders. However, the market traded below it, and then we had a little bit of retracement to the upper to the lower side of the channel. Now we are moving lower again. So this for the channel, it was broken, and investors will definitely have to look at the levels that we mentioned, and also they can take into consideration if they just want to rely on moving averages. The 100-day exponential moving average is currently receding near 1583, and the 200-day exponential moving average is receding near the low that we talked about, near 114 levels. So these are the key levels if you are trading the euro dollar currency. First signs of reversal to the upside could be taken with either a break of the trend line of the previous highs, or either you can draw this trend line here on the RSI. So any reversal or any move back above this line could be important for traders. So watch out for how this channel will evolve on the RSI. Moving to the British pound, I'm just going to remove. So moving to the British pound, on the weekly chart, it was a bit clear, the previous reversal around 135 level. If we're going to start with the bigger picture, moving to a bit narrower picture, we can see how the market here failed to retrace the trend line that was combining previous top and previous bottom, so combining resistances and supports. It failed to move back higher. The British pound against dollar stalled near 130 level, and now we're moving back down again. So definitely you have to look for the previous low near 2760 as a support area, and after that 2650 also, which was a key area here for this double top formation that was formed, and then the market moved lower. So these are the key levels on the downside. Moving to the upside, we have to definitely clear above 130 in order to move higher towards the previous first time move above 130, which is around 130, 190. So these are the key levels for the British pound against the United States dollar. I'm just going to add indicators again to have a clearer look. You can see how the bands were widened, and they diverged from each other, especially following the high volatility that was happening at the beginning of September, or late August, beginning of September. And currently we're stalling near the 100 and 200-day exponential moving average, so watch out how the price will react. The RSI bounce from the 30 level, rising towards almost 45 level. Now we're dipping back again lower. So watch out for how the price will react with the previous low, which is currently almost exactly similar to the 200-day exponential moving average. Moving to the dollar yen, which was moving one way, but despite moving slowly, it's a clear move to the downside. Now 7 consecutive days of moving lower for the dollar against the yen. The RSI is dipping below 30 again, and the pair posted its lowest level since March. So definitely what's happening, and the expectations of how Suga will deal with the policy, how his policy will be, is weighing on the market. If we go for a bit more technical, we can just draw this channel here, which is combining the tops and the bottoms, so you can see how the channel was acting here. So maybe you could be waiting for some further drop towards 102.50, which is almost similar to the previous drop that we reached in March. However, we still await some more clarity about how Suga will perform in the future. So this could weigh also on the performance of the dollar yen. So in order to highlight some key levels, definitely we better go for the previous low near 101.34 level, and ahead of it the 113 level. So these are the key levels on the downside, which also the bottom line of the channel is almost in between. And on the upside, first we have to break above the trend line. So it's almost around 105.80 area, and definitely in order to look for more positivity, we need to clear back above the 107 level in order to move back higher towards 108. So these are the key levels. A slightly minor level that could be taken into consideration is either see how this was broken. 105 could be taken as a pivotal level. If the price trades back above 105 level, could give some room to the bulls to drive the price back higher, at least towards the trend line near 105.82. These are the key levels for the dollar against the Japanese yen. Moving to the Australian dollar, which is also facing a drop today. So you can just draw the trend line here, combining the previous lows for the Australian dollar against the United States dollar. Just want to highlight some key levels. Definitely you have to look for the previous support or previous low near 71.80, and after that we go for also lower support, which was also at the time certain resistance near 70.60 level. These are the key levels on the downside. On the upside, we look for also the previous high of 73.40, and again to 74.10. So these are the key levels if you are trading the Australian dollar against the United States dollar. I'm just going to add the indicators, a little bit of a clearer picture on the chart. Okay, so if we have a look here at how the Bollinger Band is moving, so we have when the volatility is rising and the market is experiencing new highs or new lows, or at least significant move. We're seeing the bands are widening, and then here this sideways move also led to the convergence of certain bands. And now since we're having also a good volatility on the day, the bands are looking to diverge again. So a trader would definitely have to also look if the prices continue to move lower. So we have to experience the bottom side of the band, which coincides with the previous low that we highlighted. And after that, maybe we could retest the moving average and maybe have some bit of fluctuations awaiting some fresh drivers. It's either if they're positive for the risk sentiment, maybe we could retest the recent highs, or we can continue lower and also have some support here near the 200-day exponential moving average before breaking lower. So this will definitely depend on the coming market drivers. So moving to the New Zealand dollar, it's almost facing the same scenario. However, we have the Reserve Bank of New Zealand monetary policy meeting in focus. So we're still trading inside this channel. So watch out how the price will react. If we also want to draw a trend line, you can draw a trend line with the previous lows, which shows that we are currently trading near the trend line. So on a more bearish scenario, we'll have to look for a drop again and retest of the bottom side of the channel, and then a little bit of a sideways move, and then move lower towards this level here. So this is on a bearish scenario, and on a positive scenario, we could move back higher and test the bottom of the trend line and maybe move lower and go again towards a move higher. So this is possible scenario for the New Zealand dollar. I'm just going to highlight now the key levels to watch out for. So definitely you better look for the previous low, or the bottom of the channel, which currently recedes at 0.66, and then after that we have the previous low near 65 level, which showed strong support before the rally or the move higher. And on the positive note, we definitely need to move back higher, at least first below the previous resistance or previous high near almost 67 level, and that 67.15, almost 67.20, and after that maybe we could be poised to retest the high again near 67.90. So these are the key levels if you are trading the New Zealand dollar against the United States dollar. I'm going to add these indicators. You can see on the daily chart how the bands are close to each other, and almost today's move is covering the whole gap between the bands. And maybe if we're going to have the same scenario that we talked about for the Australian dollar, we could be forcing a move lower towards the moving average, maybe have a little bit of a side move, retest the bottom, or sideways move up. So this will depend on the factors that will have to play this week. So this is for the New Zealand dollar. Moving to the USD against the CAD, it's almost same for the pair. So it's a dollar moves today. The dollar is moving against all other currency pairs or all other currencies. So now we're breaking above the support, the resistance zone, almost near 32.60. So this is a key level that stalled for a while in the market. You can see here how the market was reacting with this level. So 32.60 is a key level. The level that will come next is almost 35.60. Also, we have something to take care of that I highlighted during last week's webinar. You can go for this trend line. The market was trading here, and then it's moving a little bit back higher. So we just have to set some levels. You can go for a certain retracement. So 23.6 could come at 34 level, and then we have 34.50. So maybe this area could be providing some resistance in the future if we have this dollar move higher. So this is one of the key levels on the upside, and on the downside definitely you have minimal level. So the binary support comes in at 31.31, and the key support comes in at 130 psychological levels. So these are the key levels if you're trading the US dollar against the Canadian dollar. I'm going to add the indicators again. So you can see here how the Bollinger Band, since we had a steady move down, so it was almost similar to the performance of the Bollinger Band. We didn't see much of a move in the Bollinger Band. It was steady moving down. So the width of the Bollinger Bands were almost steady in all the formation. And currently we are trading near the upper band and we're breaking above it, so maybe we could be poised to test the 100-day exponential moving average or the 200-day exponential moving average, similar to the Australian dollar against the New Zealand dollar pair. If also you need more confirmation, you better mind out the move that we are witnessing here on the RSI. So you can see how the RSI here was reacting with almost 55 level. So this could be also a filtration that you can use. This is for the USD against the Canadian dollar. Moving to gold, we have a sharp drop today. However, I'm just going to remove these and highlight the previous support near 1906. So definitely it's a level that you have to watch out for. And after that, you go for 1860. And on the upside, you have the upper side of the triangle that was drawn. So definitely you have to watch out for the downtrend line combining the previous tops and the recent top that was recorded, and ahead of that we have also the 2015 level. So these are the key levels for gold. They're almost symmetrical, so we're trading near 1902 and 1860 in terms of support zones. The first reversal zone would be the first reversal signal would be a break or a violation of the downtrend line formed by combining the recent tops, and after that we again go for a retesting of 1975 ahead of the 2014 key levels. So watch out for these levels if you are trading gold. Also, if we just go for the Bollinger Band, the bands are widening a little bit after having this consolidation that caused the width of the bands to lessen, and now we are closing in maybe to the 100-day exponential moving average, which is setting at 1873, which could almost coincide with the previous of 1863. So this area, if we're going to have a bearish formation or a bearish move in gold, we could be going for such levels. You can also go for some. So if we expect the market to move in a certain sideways down move inside this channel, also it could be the bottom. The bottom could also show that the market could be finding some good support if it drops towards 1860-65 level. So this is for gold. Even the RSI, it's dropping sharply. So relative to the previous performance, it's we're almost around 38, which was the lowest since the rally that took place back in June. So this is for gold. We're going to move to WTI, which finally had a good move 2 weeks ago, breaking out of this consolidation zone or sideways movement that was very minimal, and then it restored some volume in the market, and now we were able to correct the move that occurred during late August, early September. We had a little bit of a correction here higher, and now we're back in the middle of the Bollinger Band, where it's trading near the 100 and 200-day exponential moving average at the middle of the band, awaiting some fresh fundamental drivers that could either drive the price higher towards the upper band or the lower band. The prices were today a little bit affected by the risk-off sentiment in the market, so this weighed a little bit on the sentiment. However, if you just have to look for certain key levels, definitely you have to look out for the 36.25, which was the low previously, and on the upside 44 level. So we're currently trading inside a bigger zone that you have to mind these levels. If you just have a closer look, you can highlight these levels near the 100 and 200-hour exponential moving average, and on the upside the 41.74 level. So if we just have a clearer look on the bigger picture from a broader formation, so we have a smaller consolidation area inside the bigger zone, so 39.60 and 36.25, and on the upside 41.74 and 43.90. These could be the key levels if you are trading oil. Now we're going to move to the Dow Jones and then the session with the Dow Jones, which is having a tough day, earlier, and now we're almost recovering slightly from the drop. So I'm just going to remove all these indicators. This channel that we were trading back on, price was able to cross below it today. So we had support for 3 days on the channel, and then today we're able to break below this channel. So definitely we have to mind some key levels on the downside. among them the previous low near 25,940, which is still a little bit far away, and ahead of this we have also the 26,400 level. That's also a key retracement for the market on the drop. And after that, if you're just looking for also another channel move for this formation here, so it could also coincide somewhere between the area that we just highlighted if we are going to witness some more bearishness on US stocks. Downside, and on the bullish scenario, we have to definitely at least raise part of the move that took place, and at least trade back above the previous high of 28,000, and then 28,400 ahead of a moving higher towards maybe new high or retest of 29,200. So these are the key levels to highlight. The Dow Jones, if you're trading the Dow Jones, so these are the key levels to watch out for. Definitely we were able to trade below the trend line, so in order to at least have the first signs of positive reversal, we have to at least go back above this trend line 27,500, continue towards 28,000, and then maybe retest the previous high of 28,270 ahead of moving again higher or confirming again the impulsive move to the upside. So these are the key levels for the Dow Jones. Also, you can just also have some what's one of the trend lines that could be moving that we were trading near the past hour. So also this area here could be a key area, so better watch out how the price will react. Was we were combining previous lows that the market recorded, and currently we are trading on the trend line. So watch out how the price will react in the coming sessions. So this is all for today's session. If you have any questions, please write them down. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to sell or to buy any financial instrument, and ICM doesn't provide any investment advice. Okay, perfect. I believe this is it for today. So if you still have any question, you can just write an email to webinar@icm.com or support@icm.com, and I'd be glad to help you. On Wednesday, we're going to have a new course starting. We're going to start with the basics of trading, what is online trading, the basics of forex trading, and have a walkthrough on the platform. So if you're just interested in starting the course, that would cover all the topics from basic level to advanced level. So feel free to sign in and join our webinar on Wednesday. And for today, that's it. And thank you all for joining, and have safe trading.